started.
Hello, everyone, and welcome to the Adjusted for Risk podcast from the shores of Lake Tahoe. Today's episode is sponsored by the award-winning Zephyr, which helps advisors, wealth managers, financial analysts, and investment professionals make more informed investment decisions. This is another big week for separately managed account managers, as Zephyr announced the second quarter 2023 PSN Top Gun award winners. 2023, as we know, started off very strong, and that momentum carried over through the second quarter. And equity managers took full advantage of that strong rally during the second quarter. The increased likelihood that the U.S. economy will avoid falling into a recession despite higher interest rates propelled U.S. equities to another strong quarter, as the Russell 3000 index posted a very strong 8.39% return during the quarter. Meanwhile, the Federal Reserve raised rates 25 basis points in May, but the central bank agreed to a hawkish pause in June as inflation showed signs of moderating. Corporate bonds, measured by the Bloomberg Barclays U.S. Aggregate Index, fell a negative 0.84% during the quarter, as U.S. economic growth beat expectations in that soft landing scenario has become the market consensus. As for equities, U.S. equities, despite concerns about the U.S. debt ceiling during the first part of the second quarter, a strong 2023 U.S. equity rally raged on during the quarter. Investor optimism grew during the quarter on hopes that U.S. economy will remain resilient and perform a soft landing. Benefiting from the hot information technology sector, the growth style, represented by the Russell 3000 Growth Index, posted a very strong 12.47% return. And that growth sector, that growth style, continued its dominance over the value style, as the Russell 3000 Value Index posted a 4% return during the quarter. Excitement over AI, or artificial intelligence, and the impact it's going to have on the broader technology sector, particularly chip makers, drove prices higher. Meanwhile, defensive sectors like energy and utilities underperformed. So here are some of the strategies that make up the PSN Top Gun's large core equity universe. First one is UBS Asset Management's U.S. Equity Opportunity Unconstrained strategy, which posted a plus 12.6% return for the quarter. Waycross Partners and their Waycross focused core equity strategy, which posted a 12.4% return for the quarter. And then M Capital Advisors in their large cap core equity strategy, which also came in at 12% during the quarter. Congratulations to all those large cap core strategies on a fantastic quarter. So moving across this pond here, developed foreign shares, represented by the MSCI EAFE index, posted a plus 3.22% return. And they lagged behind the U.S. shares during the quarter. Then, while emerging market shares underperformed further after posting a 1% return. The European Central Bank raised interest rates twice during the quarter, bringing its key refinancing rate to 4%. And like U.S. markets, the story was very similar. Shares of information technology companies outperformed. The tech sector received a boost from semiconductor stocks as the chip makers benefited from the excitement of AI. Furthermore, the MSCI Japan index posted a strong 6.45% return during the quarter, as the Nikkei hit a 30-year high on ongoing expectations of corporate governance reforms and structural changes to the Japanese macro environment, all really providing a strong boost to Japanese equities. So the following strategies made up the PSN Top Guns list for the Japan universe. Goldman Sachs Asset Management, the Japan Strategic Equity strategy, posted a plus 13.8% for the quarter. RBC Global Asset Management's RBC Japan Equity strategy posted a plus 7.4% return for the quarter. And then Lazard Asset Management's Japanese Strategic Equity strategy posted another strong plus 7.3% return for the quarter. So moving along to fixed income, little different story there. So while the Fed paused its interest rate hikes in June, other global central banks continued to raise their key interest rates, with market consensus growing that the U.S. economy will be able to perform a soft landing. Treasury yields rose during the quarter. The Treasury yield curve inverted further as two-year Treasury yields rose to 4.87%, while 10-year Treasury yields rose to 3.81%. So while posting a negative 0.84% return, U.S. investment-grade bonds still outperformed Treasuries. Treasuries, represented by the ICE B-of-A U.S. Treasury Index, posted a negative 1.41% return during the quarter. So as you can see, it was a tough quarter for fixed income. While yields rose, prices fell. And investment-grade bonds, while outperforming, fell during the quarter. Meanwhile, the best performing fixed income style were high-yield corporate bonds. So the ICE B-of-A U.S. High Yield Master 2 Index posted a plus 1.63% return for the quarter, which, as I said, was a top performing fixed income style. So here are some of the strategies that make up the PSN Top Gun's high yield universe. Advisors Asset Management's Credit Opportunity strategy posted a 5.5% return for the quarter. L&S Advisors Inc.'s high yield fixed income strategy posted a plus 4.3% return for the quarter. And then Poland Capital Management's Poland DDJ Total Return Credit strategy posted a 3.9% return for the quarter. Big congratulations goes out to all the PSN Top Gun Award winners during the quarter. Strong quarter across the board. So thank you again for listening to this episode of the Adjusted for Risk podcast. You can watch all previous episodes on our Adjusted for Risk YouTube channel, as well as on Spotify. Thank you again, and have a great rest of your week.